Welcome, dear traders. The US stock market is extremely volatile. After the longest weekly losing streak, it has come close to bearish territory. However, it rose significantly on Monday, and in today's Asian session, it moved down again. The US dollar, which has been trading at its 20-year highs for some time, has also rolled back. Of course, these movements affected the sentiment in Asian stock markets as well as the exchange rates of Asian currencies. The main US stock indexes climbed by from 1.5 to 2% at Monday's close amid the growing stocks of banks and the tech giants. JP Morgan, Citibank, Bank of America and IT leaders such as Apple and Microsoft facilitate a rally on Wall Street. Apart from that, Joe Biden, who is currently visiting partners in the Asian region, made some positive comments. They stirred up the equity market. Biden said he would review Trump-era tariffs imposed on imports from China. He could also drop some of them. However, investors remain cautious. After all, the main risks, namely monetary policy tightening and the possibility of a slowing economic growth, have not gone away. Traders are now waiting with bated breath for Jerome Powell's speech today. On Wednesday, the Fed will reveal its latest meeting minutes. And let's not forget that the earnings season is still underway. Sometimes it brings unpleasant surprises. For instance, 474 of companies in the S&P 500 have already posted results with a 78% of firm beating expectations. However, Monday's powerful overnight rally is today due to Snapchat. Snap, the maker of the messaging app, said that the company is expected to miss its quarterly financial goals in the second quarter. Snap stock plummeted by 31%. Futures on the main US indexes declined again. On the chart of the NASDAQ index, a sharp drop is seen clearly. The chart of the US dollar is also very illustrative. The US dollar managed to slightly recover after Monday's fall. However, it lifted lower shortly after. Negative forecast for Snapchat, the possible end of lockdown in Shanghai, and Biden's comments on China boosted the appeal of the greenback as a safe haven asset. The US dollar index, which measures the strength of the currency against the six main rivals, rose above 102 points on Tuesday. However, traders have already priced in the upcoming Q-rate hike by the Fed. Therefore, the index is fluctuating in a narrow range of 101.74 and 102.35, ahead of Powell's speech. Given the inflationary pressure and the significant increase in wages in the country, the tone of Powell's speech is likely to be hawkish. The US dollar is losing momentum due to a fall in the Treasury yields. At the time of preparing material for this video, it reached 102.05, trading with a bearish bias. Perhaps it could change its trajectory after the release of the PMI manufacturing indexes by several states today. If the above-mentioned data is positive, the US currency will go deeper into the bearish territory, and its rivals, on the contrary, are likely to spread wings. Today, the greenback has already shed losses against the yen. At the time of preparing material, the yen advanced to 127.35. In today's Asian session, the pair was trading in a downward channel of 127.17 and 128.08. Apparently, traders have already digested the latest data on the PMI manufacturing index in Japan. Production in the country has contracted significantly in 3 months. Yet there are signs of a growth as well. The Bank of Japan sticks to an ultra-loose monetary policy to stimulate the economy. The idea of creating an Indo-Pacific economic framework voiced by the Joe Biden sounds also quite beneficial for the Japanese economy. The list of allies will include Japan, Australia and South Korea. The Australian economy is quite strong and resilient. It expanded considerably in May, picking up steam despite a decline in trade with China due to coronavirus woes and to adverse weather conditions. According to the latest economic reports, PMI indexes have been at the lowest levels in the last 4 months. Nevertheless, they still remain in expansion territory, and this is a good sign. Besides, the Aussie retains bullish momentum amid the Reserve Bank of Australia's hawkish stance on monetary policy. The regulator is widely expected to undertake another key rate increase in June. Taking into account all these factors, the AUD-USD pair was fluctuating today between the resistance level of 0.7112 and the support level of 0.7067. Risk appetite undermined the greenback's rally as a safe haven currency. Yet, a small intraday drop in oil prices weakened commodity currencies. At the time of preparing material for this video, the pair decreased, trading at 0.7068. These are the main highlights of the Asian session. Today, market sentiment, as well as the movements of currency pairs and the stocks, will largely depend on the publication of the PMI manufacturing indexes. Subscribe to our channel and keep your finger on the pulse. Don't miss our next video review. See you soon.